And the first rates, you want to start actually with banks because they hold the key, frankly. We are what, 40 points away, about 50 points away from an all-time high on the Nifty. I really hope it happens because every day we have been ordering the cake, the bells and the whistles. You want to celebrate. 11245 is the market breadth, phenomenal market breadth. I think has really been the beauty point for this market. That doesn't matter what Nifty is doing, doesn't matter what flows are. There is a vast majority of left out naysayers which are now coming in. They're ready to just jump in right from the word go. 21 points up for the Nifty. The banks are looking okay. IT holds the key because IT yesterday in a sense led the market rally. So will IT be the real shot in the arm for the bulls to take markets higher? And I think IT index is off to a good start. Not too many newsmakers, Aisha, but in general, I guess there is a lot of green on the screen, and I would again say touch wood.
Yeah, you've got HDFC Life, of course. The CCI has now allowed HDFC Life to acquire, or rather HDFC to acquire their additional stake in the company and HDFC Ergo. So that's a stock in focus. Shriram Finance, let's bring up that stock for you. Close that block deal. Piramal Enterprises as well. Post the Shriram Finance stake sale. So look out for that stock as well. Pidilite, which is looking to set up a unit in Gujarat. Look out for that. GR Infra, which is backed projects worth a sizable 1,843 crore rupees. That's going to be another stock in focus. And RVNL, important clarification saying that no breakdown of joint venture with Russia's TMH and that the MOU still stands valid. RVNL has gapped up 2.5% this morning as we speak right now. So these are a couple of stocks which are in focus this morning. There's of course Blue Dart as well. After that Motilal Oswal upgrade, the target price up to 8,040. PNB Housing Finance, the management meet takeaways are pretty positive. They've guided for a loan growth of 18% for FY24. Disbursements in the range of 22 to 25%. And then data patterns as well as landmark cars, considering the lock-in period for both these ends today. So just want to revisit those names as well. For the Nifty, it's quiet as quiet can be. Haven't seen any move, but I want to see what Tata Motors is up to. Even in this quiet market, it's at a 7-year high and has been scaling up on a daily basis. 583 on Tata Motors. That's also had a bit of a sedate start, much like the rest of the market. But I can see some green print on an HDFC Bank, for instance, right now. So let's revisit what an SBI, what Reliance, what even Bajaj Finance is up to for that matter. A big move on Friday and then yesterday it's somewhat, hunkered down. Reliance has had a soft start, Bajaj Finance as well, pretty quiet. Kunal, what's going to lead us forward?
Well, I think it should be large caps back again, which could make a comeback. So we've seen good opening coming for many individual large cap stocks. So I think that's a relief for the index. And we're back again above the 18,800 mark on the Nifty. More importantly, I think the Bank Nifty this time is not showing extreme negativity. So at least at the start. So hopefully, if you can add some more green color to the Bank Nifty, we can see a very good recovery for the index and hopefully a second half breakout of the new high for the day for the Nifty. Now, the stock which I will look to trade in the open would be from the mid cap end. It's Power Finance. That's a stock which has been looking extremely attractive. PFC, RSC both have been looking quite charged up into this series, and I think at 204 levels, PFC something which I would recommend as a buy, as well as look out for a buy, targets of 225.
Okay, PFC is the opening trade. Just wanted to flag out a couple more names before we move forward. Aptus Value Housing has seen a downtick of around 7%. There's a large trade wherein 1.6% equity has changed hands, so that stock is open with a cut of 8%. Subros, that stock was logged in upper circuit yesterday, 20% higher. It's today as well, gaining as much as 20%. So 2 consecutive days of circuit on that one. And if you look at the 5-day move, that stock is already up 50 to 60% in the week gone by. And lastly, ZEEL Entertainment, that stock had taken a massive knock yesterday, 6% lower, but seeing quite a bit of bounce back today. It's 4 to 5% higher as we speak. That stock, in fact, recouped all the losses of yesterday, trading with 6% gain. Naresh, what is your first trade?
So that would be a buy on HCLTech. The stock has given a breakout and taking leadership in the large cap IT space. Expecting this to slowly continue towards the 1250-1300 mark.
Gautam Shah is ready. Let's connect and let's say hello to him, understand what he makes of the current market setup. Gautam, good morning. How you been, my friend?
All well, Nikhil. How has it been with you?
Well, no one's complaining in this kind of a market. Only the folks who did not watch our shows and did not get the right advice are the ones only complaining, right?
True.
Okay. We've seen a 10% rally on the Nifty, 15% rally on the Bank Nifty. Is this as good as it gets for the summer rally of 2023, or this party will continue?
Well, I think people are looking for a reason to celebrate the Nifty hitting lifetime highs. But honestly, I think for the last 6 weeks, there was a celebration every day at the markets. Given the kind of strength that you see in the broader markets, Nifty, Bank Nifty, and some of the top sectors have just been quite irrelevant. I think one needs to understand that the last 18 months, which was a pretty challenging period because the Nifty broadly traded in that 16.5, 18.5 kind of a band, it was a market where large caps stood out. That's the space where there was a lot of outperformance, and broader markets actually lost a lot of ground. Till 6 months back, I think 60% of the market had lost about 40% from the highs. So that's the kind of extreme statistics that we were working with, and therefore there was obviously room for a lot of recovery. And if you actually go by the ratio charts, which is the mid-cap index divided by the Nifty or the small-cap index divided by the Nifty, that saw a massive breakout a couple of months back. So really the trade has been outside of the top 100 stocks. And I think this is going to continue for the rest of the year. Nifty hitting lifetime highs or going higher, I think is just going to be a formality. I don't see the index running away from current levels. We are a little overbought at these levels. 18,900, 19,000 is a point of resistance. So I don't think large caps are going to do anything special. But this mid-cap, small-cap rally, I think is going to continue. And there will be internal corrections along the way. In fact, what I have seen in the last 3 months really reminds me to that 2003 period, which I'm sure Nikunj, you also witnessed, wherein the index doubled in value, just gradually going up every single day. So focus on stocks, ignore the index would be my takeaway to your viewers.
Yeah, but it actually went up more than double. I think it started from 4,000 and then topped out closer to 20,000, or 5,000. It started close out to 20,000. So what to your mind is the starting point for this index? Because we've been asking everybody on the channel that Sensex 1 lakh kab hoga.
It's quite irrelevant. I think these are fancy numbers which people like to keep talking from time to time. I think the idea is to create wealth. The idea is to be in good stocks. The idea is to be in structural stories. The point about 2003, I was referring to just 2003, wherein a 3,000 Sensex became 6,000. And then obviously it moved up 7 times over a period of 2003 to 2007, 2008. But I do believe that at levels of 19,000, I think the large caps in the index is richly valued. And you don't have a global environment where everything is doing well. India has stood out. US markets have started to do well. It's only the Nasdaq which has actually gone up. Look at rest of Asia. None of the markets apart from Japan have done very well. European markets have just stabilized around 52-week highs. So it's not a global bull market as such. It's more like an Indian bull market backed by domestic liquidity and aided by foreign liquidity, which has really come in the last 1 month. And I think this trend of being stock specific will continue based on the ratio chart analysis, which I just put out.
Hi Gautam, this is Anisha also joining in the conversation. What's your take regarding IT? Because the street is divided whether it's bottomed out or not. What does the chart pattern tell you?
I think it's bottomed out. I think I'm very clear that for almost 15 months, this index went through a large correction after the 2020-2021 rally. And it went through a price correction initially. And I think the last 3 or 4 months has just been pure top quality time correction. At a level of 18,900, you don't have too many sectors or stocks in the market which give you a good risk reward to take a trade or in fact an investment bet. And I think IT is right up there. So between now and the next, maybe till Diwali, I would actually bet for IT, pharma and metals, 3 of the underperformers of the last 6 months to actually do well and take the markets higher. Not to ignore the mid caps and small caps, which obviously are in a zone of their own. So I actually like all the top, IT stocks, whether it's HCLTech, TCS, Wipro, Infosys, pretty much in that order. And I think there is a 15% upside on the index and much greater upside for stocks.
But Gautam, you think we're in that kind of a market where the traditional heavyweights will continue to lag? Not much participation coming in from HDFC Bank, from Reliance, or for that matter, even SBI, as compared to what's happening outside of these indexes?
Aisha, that's exactly what has happened. These large cap names have really become elephants, and it's very difficult for them to now run. So that's probably the reason they will see their gradual move up from time to time. And the reason for Nifty's underperformance is because HDFC Twins, ITC to a certain extent, Infosys, TCS, Reliance, these top 6-7 stocks have just stopped moving at a, rapid pace. And I think this trend will really continue unless you have some major trigger. And let's not forget, you have the earnings season coming in next month. You have the general elections, some state elections, coming up later this year. So all of these factors will play on the index, but not on stocks.
Gautam, you said how, let's say a figure of 100,000 on Sensex, etc. is theoretical, but what's your own, analysis telling you where the Nifty is headed by the year end? Any number, any target in mind?
Well, you know what? It's been quite crazy in the last 18 months. The moment you would have given out a bigger target, you saw that 2,000 point fall on the Nifty and vice versa. It's been like a pendulum in the last 18 months. And it's the kind of world where you cannot look too much into the future. Yes, it's all good to talk about structural story, 5-year story, 10-year story. It looks good on paper, no doubt about it. But not every investor in the market can really handle that kind of patience, which today's world provides. But still, if you want me to put out a number, I think my working number on the Nifty has been 20,400. And I think maybe, before the general election results next year, we should get to that number. But the problem is, it's not big in percentage terms. I think the real return is going to be again in the broader markets.
Okay, so Gautam, let's talk about the broader markets. Share with us some ideas where you think one can still, get into and you still see a significant headroom which can beat the index returns.
Actually, if you look at the Nifty 100 index, Nifty Midcap 100 index, for 18 months, it tried to get past that level of 33,000. So I think there were 7 or 8 attempts to get past that number and it failed. And the broad range was about 26,000 to 33,000. So if you're going to have a 7,000-8,000 point kind of a breakout, I think the working target is about 39,000, 39,500, which I think is about 12-15% away from current prices. So that's the kind of upside potential that we see in the mid caps from current levels and about a 10 to 12% upside on the small caps from current levels, because we are looking at 12,000 on the small cap index, which is the lifetime high. But I think there are some very interesting pockets which have developed well. Cement, I think, looks very exciting to us, large cap and mid cap cement. Textile is finally making a comeback. The entire unlock space led by Indian Hotels, Delta Corp, I think looks very hot on the charts. Fertilizer has done exceedingly well. Auto ancillary, I think, is the story of the next 6 to 12 months. And not to forget the QSR space, something that I have liked all along, whether it's a Devyani or a Sapphire, and now even a Jubilant Foods. So some of these, stocks and the manufacturing theme, the industrials and the manufacturing theme. So these 5 or 6 themes which I just put out in mid cap, small caps, top quality is where we are focusing on.
Okay. I'll go back to that very basic point, Gautam, that in this kind of a market, what should be the best strategy to maximize? So you say stay invested, party abhi bachi hai. But should one simply stick to their investment and their long positions, don't look at SGX, don't look at what's happening on Wall Street, don't look at crude prices, just stay the course? Or it is time to now periodically start booking profits, let's say 10% at every 10% rise?
Nikunj, thankfully SGX is no more, so that's I think great for a lot of traders and investors who used to watch this every single day. But I do believe that the last 18 months was all about playing 2020 at the markets. You had to take those bets over few weeks to few months, and if you did not get out, you were on the receiving end, very, very quickly. So that was the last 18 months. Now I think we've got back into test cricket mode, which was basically 2020, early 2021, wherein you bought and hold and you played the run-up. So I think we are in that kind of a space wherein your passive portfolio should be about 60 to 70%, and your active seasonal kind of a portfolio should be 30 to 35%. And I think if you just stay with top quality stocks, because even so far the rally is still in grade A and grade B, it's not moved down to grade C and grade D. And therefore, I don't see any real froth in the system. Yes, we are overbought, but there is no froth. So just to answer your question once again, play long-term, buy and hold, I think is the right approach, because you don't want to get out cheaply when there is big returns to be made.
You believe that autos are overbought, pullback, rally likely, capital goods stocks overbought, pullback, rally likely, FMCG stocks overbought, pullback, rally likely. What could be the extent of the pullback rally in 3 of the performing sectors? Because if you really look at the 3 horsemen in this market, it is auto, capital goods, and to some extent FMCG.
They are extremely extended, Nikunj. I think you get a scenario wherein you feel that this is going to continue forever. Honestly, that's the kind of space that we are in. But I just feel that some of these top performing sectors are very overbought. Now, overbought does not mean that they have to correct big. It could just mean that they get into sort of a time correction for some time. And I'm not looking at a correction anything beyond 3 to 5%. So the three sectors that you mentioned, auto, FMCG, and capital goods, could actually see a 3 to 5% correction and more of a time correction going forward. But in the same period, I think IT, pharma, metals, mid-cap, small-cap, and real estate, I think are pockets that we like, and we would continue to look at long-side opportunities.
Why do you think metals will remain steady? Because that is one space where this year has been extremely unpredictable. I mean, it is a space where the pendulum has swung twice, not once.
That's very true. It's just that the charts are developing quite well. Honestly, I would not be in a position to give you a fundamental reasoning to my thesis on metals. But I just feel that, it's the kind of market wherein the baton is being passed from one sector to the other. And I think it's now got passed to metals. Look at Tata Steel, look at where JSW Steel is, JSPL, and some of the smaller metal companies, RK Forgings of the world. They're all doing exceedingly well. And the damage was very large, in the last 6 to 8 months when it went through that correction. So purely from a risk reward perspective, earnings perspective, and obviously from a charts perspective, I think metals is a space that can do well and can go back and test new lifetime highs.
Okay, Gautam, great to have you on the show. Thanks as always for dropping by.
Thank you.
Let's move on. Let's just quickly revisit the market before we move forward. It was once again a very, very quiet start and continues to really be quiet. Shriram Finance, though, that's your big story of the day. 12.25% higher. Piramal Enterprises, gap up there, 10% up move. L&T Finance, Mahindra Finance, and ZEEL, which is actually holding up 6% on the futures as we speak right now. But the other buzzer is really what the developments have been of late in Motown. And Nitin Gadkari, the Minister of Road Transport and Highways, said at an event day before that he has signed papers to make ACs mandatory for truck cabins in India. And he says that this transition is going to take place by 2025. Let's hear out what he said.
वो जब मैं मंत्री बना तो मुझे लगा कि इतने 43, 44, 47 में डिग्री टेम्परेचर होता है तो ड्राइवर की हालत बहुत खराब होती है। तो मैं एयर कंडीशन केबिन के बारे में बहुत आग्रही था, पर इससे कॉस्ट बढ़ेगी ऐसा कहकर कुछ लोगों ने काफी विरोध किया। पर भी आज मैं यहाँ आने के पहले मैंने वो फाइल पर साइन कर दी है कि इसके बाद ट्रक की जो ड्राइवर की केबिन होगी वो एसी होगी।
Okay, so that was the statement that sent the stock soaring yesterday and today as well. Subros, for instance, has been logged in upper circuit for 2 straight days, as well as you had Amber Enterprises, which had been buzzing on account of that. Let's welcome on board then the management of PK Duggal, the CEO at Subros, to try and understand what exactly could be the potential from this particular announcement. Mr. Duggal, hi, thank you so much for making time and speaking with us. Wanted to begin by understanding from you of what is the actual probability of this happening, because this is not the first time we are hearing this. It happened in 2017 as well, and there was a lot of pushback from OEMs. What's the likelihood that this will become mandatory going forward, ACs in commercial vehicles and trucks?
Thank you very much for having me on your show. Yes, this was notified in 2017 with the implementation date of January 18. But as you said, with the representation of the OEMs, it was diluted to blower stroke air conditioner, blower as mandatory, air conditioner as optional. But we have been waiting for this notification to be revived for last 3 years. And finally, it has been informed yesterday or day before yesterday that it's going to happen. We welcome this move from the government side, and we see this time it would be finally rolled out.
Mr. Duggal, but just to understand it better, is it already official now, the notification that you're talking about? And also, what could be the potential for you as a company from this particular notification?
So we have yet to see the notification. It is announced by the minister. So we will wait for the final notification. What are the fine lines which have been notified now? This market, which is where this notification will be applied, will be N2, N3 category of the trucks, which is MSCV category. So right now, this market size is around 3.2 lakhs to 3.5 lakhs per year. So by April 25, when this will be finally implemented, we expect the market size between 3.5 to 3.8 lakhs vehicle. So the overall market size would be around 500 to 550 crores. And being the market leader in this space, we expect that for the company, it would be around 200 crore delta, which would be coming in.
But Mr. Dugal, you think it's going to be an easy transition? The timeline up until April 2025 is not too, far behind for the kind of transition and the scale at which we're talking about.
Yes, right now the almost 18 months are given for this rollover, and although this notification was diluted in 2018, but we were engaged with the customer for the product development side, and most of the OEMs have already geared up, and right now the ACs are optional, but still 15% of this market is already turned into aircon. So I don't think there would be a big challenge unless OEMs feel some other constraints to push it further.
You have to increase your capacity significantly, considering you do cherish the largest market share?
Not completely. Some of the capacity we already set up, so there will be some delta investment we'll be having based on the speed of ramp up, because if we have to cater to around 150 to 200,000 number based on our market expectations, so we'll ramp up, but that will not be a significant action from our side.
Mr. Dugal, I have a very basic question. What's the need of making the ACs mandatory? There's always an option available, right? And similarly, if I have it right in PVs, the optionality is that it's not mandatory at this point of time. So why are you not expecting a bigger push from OEMs yet again? And why do you think it's mandatory, if at all?
So now it has turned to more of a safety requirement, because the level of transportation which is happening, it is added to the fatigue of driver, and the number of accidents which we don't have the exact number, but lead to more on accident side. So it is more on safety of the driver, safety of the vehicle, and of course the indirect benefit of increasing the productivity is also seen over a period now. So we see it's a win-win situation for both from the OEM, from the owner, and from the driver side.
Okay, let's talk the rest of the business as well, Mr. Dugal. Could you talk to us about what kind of growth you're envisaging in the coming couple of years? What would be the growth rate? And in terms of margins as well, what's the expectation?
So as Subros, we have been, last 2 years, we have been growing in double-digit growth. So we want to sustain this for next 2 to 3 years also. So double-digit, what we are expecting, although the industry would be expecting between 6 to 8% growth. So of course, that is on one side on the top line, but on the bottom line, since commodities and other economic factors are being easing out now, so we see returning back to the normal margin level in next 2 to 3 years' time.
And we understand that you have cash reserves of almost 854 crore rupees as well on your books. Any plans on how to utilize the same?
So since the industry is going for a transformation also into EV or into hybrid or alternative fuels also, so we are waiting for the final transition, how the industry will finally shape up. All the investments will be towards that, so we are watchful right now.
Just to come back to the point, Mr. Dugal, you said normalized level of margins going forward. What could be that number? And secondly, with respect to your PV business as well, the passenger vehicle business, how's that gaining traction?
So I'll not be very specific in numbers, but yes, improving in margins, whatever we lost because of these economic factors, which were not back-to-back compensated by the OEMs. So we are trying to recover that. So normalized margin coming back to the pre-COVID situation is what we are looking at right now. In PV side, industry is growing. We have recovered already the pre-COVID level situation. So we are expecting that the growth in PV, including the transition to EV or hybrid, I think we have a very good chance of this industry reviving further.
Okay, so that's the take coming in. That's about Subros. We're expecting a big momentum. Philip coming in from the latest notification on making ACs mandatory, expecting to go back to normalized margins, as well as growth from PV space is also, which is expected to be quite strong. Thank you, Mr. Dugal, for joining us today and talking to us about the prospects. But from one big management to another, we have with us Mr. Nadir Godrej, the chairman at Godrej Agrovet, joining us to talk to us about the weather, what's happening with the business, and what's the outlook is going to be like. Mr. Godrej, hi. Thank you so much for making time and speaking with ET now. Just to begin with, I wanted to for you to put the cap of the industry down and talk to us about what's been the progress of rainfall telling you at this point of time, because it looks like it's going to be below normal monsoon. It's been very erratic. What does it mean for the prospects of sowing and your business?
So far, the monsoon has been slow, both because of the El Nino and the cyclone Biparjoy. But the cyclone Biparjoy did bring a lot of rain to the northwestern parts of India, and that has filled quite a few of the reservoirs. So the reservoir levels aren't all that bad. And this El Nino is not very severe. And if we get good August rains, the Kharif crops will be reasonable. And there's no reason to believe that the August rains won't be good. So although it is a late start, it's not a very bad situation. Also, we are likely to have rains late in the season, as we have been in the last few years, and that is going to be very good for the Rabi crops.
Okay, so you're saying that once the monsoon catches up, you're pretty much on target for that 1,000 crore rupee revenue mark for FY24?
We are quite hopeful of this year. We are doing better than the previous years. Some of our businesses have been challenged, like Aztec Life Sciences has been challenged, but we have our new R&D center, and there's a lot of interest for the new products that will come out of our R&D center. A lot of companies want to partner with us, so that situation is good. The crop protection business will depend a little bit on how the monsoon develops. The dairy business is turning around, and the poultry business is currently doing very well.
Mr. Godrej, Nikunj
and oil palm is always a very steady business for us.
Mr. Godrej, good morning. Nikunj also joining in. So good to always connect with you.
Nice to see you.
50% of your business, Mr. Godrej, is animal feed. Now, this is a business where a lot of moving parts are there. First, what happens to raw material, then what happens to monsoon, and then what happens to the underlying moot point when it comes to the farmer. Connect the dots for us. 50% of your business has got a lot of moving parts, and how will that evolve?
The animal feed business is actually a very good business for us. We have done a lot of R&D and improvements in cattle feed. We also have a new breed of cattle that we have developed with Israeli technology, and we think that the future in this business will be very bright. Plus, the animal feed business has links with our poultry business and our dairy business, and we plan to capitalize on those links in the future. But actually, a lot of our profits do come from our oil palm business, which is steadily growing. The government's new policy on oil palm is very beneficial. We are getting new allocations in the Northeast and in Telangana, which are very promising for the oil palm business. And these two businesses are complementary. They work on different cycles. And therefore, overall, we think that Godrej Agrovet has a very interesting portfolio.
Whatever you lost last year because of this extraordinary spike in commodity prices, where margins came down, profits came down, are you likely to make it up this year?
Yes, we are. It looks like this year is developing much better than last year.
What is the good news and what is the bad news? Let's discuss that. When you say things are developing, what is developing better and what is not developing better?
As I said, the cattle feed business, the dairy business is doing much better. In oil palm, we had actually very beneficial prices towards the beginning of last year. Those prices are not so good, but we've made a lot of improvements in efficiency. We are closely working with our farmers to improve their yield. We are using fertilizer strategies to improve the oil content. And all these technical improvements are very promising for the oil palm business. Plus, our nursery expansion is at a fast pace.
Okay. There is this general view that the agrarian economy stroke the rural economy is under pressure. How much of that is reality and how much of that is myth?
Some of it is reality, and climate change affects the agrarian economy more than other parts of the economy. But the good news is that technology is steadily improving on the farm. And with technology improvement, yields can improve considerably. The bad news of Indian agriculture is poor yields. The good news is that there is room for improvement.
With respect to the pricing of palm itself, it's been fairly volatile over the last couple of years. What's the expectations going forward there?
We expect palm oil prices to be fairly steady. When crude oil prices are high, palm oil prices rise because of the connection through biodiesel. Now crude oil prices are at a much more reasonable level, and we expect palm oil prices to stay at that level. We certainly don't expect them to fall a lot.
I have a very simple question, sir. Godrej Group needs no introduction when it comes to the consumer appeal. Some of your businesses are unique in nature. You got the best in terms of the product and availability and network. But your margins, they're not very impressive. I was hoping that for a company like yours, the margin should they be north of 10% plus rather than south of 10%?
If you're talking about Godrej Consumer Products, I won't like to comment on that. But actually, we are doing quite well. Our growth has been steady, and we continue to make progress. We've made a new acquisition, which we hope will add to our bottom line because there is a lot of synergy with the new acquisition, and I don't see Godrej Consumer Products being in a bad place at all. It is growing steadily, and it will continue to grow steadily.
Are you growing because you're gaining market share from the unorganized player, or it's the size of the pie which is increasing, at least in some of your businesses?
I wouldn't like to comment on the details because I'm not day-to-day active in that business.
No, sir, I'm talking about Godrej Agrovet. I'm talking about Godrej Agrovet.
What is the question?
My question is that you're confident of growth, sir, but are you growing because you're gaining market share, or this is because the market itself is increasing?
Well, in places like oil palm, market share is rather irrelevant because market share is determined by your allocations. What is exciting is that oil palm is growing very, very rapidly in India.
Do you see the dynamics of the entire oil palm industry changing? One is allocation. Second, we understand that the government is seriously looking at increasing the total land under cultivation when it comes to the palm oil cultivation. Up until now, sir, this industry has been dependent on imports. But do you see that dramatically changing in 3 to 5 years?
It's very difficult to 3 to 5 years is an extremely short time in the oil palm industry because the tree takes 5 years to grow. So if you tell me in 20 years, I say the Indian production could be higher than imports in 20 or 25 years, but certainly not in 5 years.
We started our interaction, sir, with your view on how the delayed monsoon is impacting your business. But if I wrap it up by saying that you certainly feel that right now there is nothing to worry about and all is well. Can I say all is well for you?
Already there's been a little bit of damage, but I don't think this monsoon is particularly bad. It's going to be a reasonable monsoon, slightly below normal, and a lot can be retrieved. And if we get good rains in August, we will certainly, Indian agriculture will do reasonably well. And as usual, the Rabi crop will be very good.
So on your behalf, I can say all is well then, sir.
Thank you.
Appreciate your time, sir. Thank you very much. Now, what do we have on the markets? You've got Shriram Transport and Piramal Enterprises. That's really the toast of the town, so to speak. PL 11%, they get the cash. Shriram Finance, that's where the block deal has happened. Now, you would ask yourself is that if somebody is selling so much of Shriram Finance, why is that stock up? Okay, logically, Piramal Enterprise, they get the cash in. That's largely because markets have been worried about this overhang. I mean, sometimes when you know that there is a large, big supply which is going to be coming in the market, it just acts as an overhang because the buyer thinks that let the supply get over, I'll participate after that. And I think that really is the story for Shriram Finance, if you frankly ask me, because the large overhang of TPG and Piramal, that is over. And now you pretty much know that at what price the large seller and the large buyer have met. That deal has been done and the large overhang I think is over. And for me, that is the reason why Shriram Finance is actually higher. Meanwhile, Sensex is nearing an all-time high. Nifty is nearing an all-time high. Let's hope it happens today. 21 points. Should we take a break? Yeah, let's take it. If we touch an all-time high, we'll come out early.
Back with the market right here on ET Now. Let's revisit what the market is. And after a quiet start, we are just about making another push to that all-time peak, 34 points away, and then cooled off a little bit. Oh, we're only 17 points away now. So it seems like in this bout, very much it could happen. This is, I think, the closest that we've got to the all-time peak. Or I think last time it was 10 points away, right? 9 points away, okay. So there's still scope.
Vikas Khemani, is he ready? There is some, I mean, he's been doing yoga. So Vikas Khemani, I've heard a new term called Lakshmi Asan. And you will be demonstrating Lakshmi Asan. Everybody in stock market believes in Lakshmi Asan. So tell us more about this.
I think you are good at that. You tell people how to sort of make money.
No, see, we are the ones who propagate risk management, but you are the practitioners. We are the messengers. That's the difference. So it's a practitioner who has to tell us the secret of Lakshmi Asan, not the messenger.
I think the only Lakshmi Asan we should stay invested into India. You will make a lot of money, lots of money.
Okay,
Surprising.
you can see Vikas, you can see his lovely daughters, and you can see his wife, and that's yoga day. So Vikas, early in the morning, it's a daily ritual.
Yes, I think we do 3 days a week yoga exercise, and then 3 days meditation. So that's a usual.
And एक दिन छुट्टी, 7वें दिन, the week में 7 days.
Either running or something else, or lazy Sunday.
No, but because just drawing the connect, I'm sure the discipline that yoga brings about, some benefit to your style of investing as well, right? Ever since you've been practicing yoga, I'm sure things have changed in the way you have become as an investor as well.
Absolutely, there's no doubt on that. I think yoga and meditation go hand in hand, and if you can do a combination of that, it basically brings calmness in your mind, fitness in your body, alertness in your body, alertness in your mind. So it definitely sort of builds your very, very all-round perspective. So I feel everybody must do it. Also, it kind of leads you towards spirituality, and which if you see most of the investors, successful investors, they will tell you that a tinge of spirituality or insight into spirituality always takes your level to the next in anything, and especially in investing. So I think it's yoga, meditation, and spirituality all are interconnected, and if you follow regularly, I am sure it will make an impact whether you are investing or doing anything else.
Okay, so Vikas, which is that stock that you would want to flag out, that you would have had more patience, you would have made more money? Any error, any mistake that you want to highlight?
No, I would stay away from commenting on stock specific thing, but I can only say that if many times market tests your patience, goes against your one of my largest sort of money maker after I bought became 1/3 from my cost price, and eventually ended up becoming 100 bagger. So, market test your patience on many counts. And if you are sort of self-assured about your own analysis, about your own work, you can stay put to, in those times. And probably, yoga and meditation helps you in those trying times to stay put and not get panicked and get carried away by that.
Yes, said then done. Easy to say to keep the patience. But the other thing that a lot of market participants fail to do is to stay away from FOMO, right? That the fear of missing out is quite large, and that's something which is visible right now in the market as well. What would be your advice around that?
Absolutely, and I would say that anything you act out of FOMO, you are bound to suffer, you are bound to lose. I remember having a conversation with Nikunj, in the middle of when we had all this internet new tech euphoria, and everybody was participating in that, and we all know that what has happened. So time and again, market oscillates between fear and greed. And so when it is, when markets are fearful, nobody wants to buy. But as market turns around and things doing well, everybody feels FOMO, and people kind of jump on that, takes it to the other side. And the reality of the thing is that most of the novice investors, unqualified investor or uninformed investors end up riding into the late stage of the euphoria, and that's where they end up losing money. So it should never be, people participate out of FOMO. Market gives enough time, enough opportunity to everybody, every investor, and there's a huge amount of money to be made through different styles. So FOMO is one I always avoid investors, tell investors to avoid. We never bought any of the internet or new tech stocks throughout the whole euphoria. So same thing, eventually money making and retaining money are two different things, and one has to keep money also.
So because we are 10 points away from all-time high on the Sensex, 15 points away from an all-time high on the Sensex. Which is one yoga asana which do you think will depict the real picture? I think in my book it will be Tadasana, right?
Absolutely.
That's the real stretch one, right?
Tadasana will be the best, and it will keep touching higher and high. So, and if it's like this, if a kid does Tadasana, its height keeps on increasing, right? It helps in increasing height. So I guess our market's height will keep on increasing. We are still an adolescent. We have long become an adult and a mature man. So I think Indian markets are in one of its best phase, and I see a great runway of creating wealth ahead of us over next 5 to 7 years, 10 years period. Next decade belongs to India.
Okay, Vikas, we got a very special message from your wife and daughter as well, who, as our viewers just saw, were actually practicing yoga along with Vikas this morning itself. Let's hear out what they have to say. I don't know whether it's on yoga or the markets, or maybe both. Let's listen in.
Wishing you a very, very happy International Yoga Day. In today's fast-paced age, especially being a woman is not an easy task, where you're constantly juggling between home, a family, your work, everything put together, aging parents. I think yoga has helped me a long, long way in managing and balancing things. It has brought about a lot more stamina, a lot more fitness, a lot more focus, and I enjoy doing everything I do. I strongly recommend that every woman, everybody for that matter, but especially women, should spend some time doing yoga every single day.
But during the holidays, I was forced into doing it. And
Alright guys, we have breaking news, and what a day to really make new highs. As tall as you can get. It's the ring of a new high for benchmark indices. Indian markets, after a gap of nearly 6 months, have hit a new high. Now it's a formality whether the Sensex has hit a new high first or the Nifty has hit a new high first. But benchmark indices, look at that ring when you say that markets at an all-time high. Vikas Khemani, let's hear that ring from you. कुछ तो आज screen पे करना पड़ेगा भाई.
You don't have to do everything. Just stay. If you're invested, just enjoy it. Yeah. I mean, I think India it's just a reflection of one more milestone, according to me. I really don't get excited with, it every day, but it's a great news in that sense. It's more vindication, but in my opinion, lot more to come.
A new high, yes, on the paper, but is this as good as it gets? No. But when a new high is hit, what do? We always celebrate. And how do we celebrate? Well, there you go. That's the gong. Ladies and gentlemen, the boys and the girls are ready. Let's celebrate the new high on the Nifty and the Sensex. There you go. It's Sensex first, and that's what we always mark. And it's a day to remember. Why it's a day to remember? Because it's happened after 6 months. Well, we look back and say, okay, 21st of June, we made a new high, but that's not the peak. This is certainly not the peak. But the fact that you hit a new high after almost 6 months, it just makes 21st of June rather very special. Happening on a yoga day.
It's not yoga, I must say that, Vikas. It's actually Lady Luck. When we had your wife and daughter on air, that's when we made it to the all-time high on the Sensex.
That's why I said no. Tell him. You should have
Lakshmi
Asana.
Yeah.
No, because think about it, right? Just think about it. Everybody in stock market, they should, they should now innovate something as Lakshmi Asan. And in that, I'm sure you will not do that Sunday break also. This Asan, you'll be happy to do 7 days in a week, right?
Absolutely.
But because why should one not be tempted to log gains? I mean, it's been a good run up, 10% on the Sensex, 15% on the Nifty, 25 to 30% in average mid cap stock. I mean, it's logical to book some profits and take some chips off the table.
Again, if you take chips off the table, what will you do with it, right? Ultimately, unless you need something, when you will invest somewhere else, right? So, taking chips off the table for the sake of it is not a great idea, unless you think that markets are not going to do well. It's going to correct, which at least I don't think so. Like I said, that according to me, even in a short term to medium term, I see a great run coming ahead of us, led by liquidity. Of course, corporate earnings cycle is good, but I think we will see a massive flows coming from FIIs. They last 2 years they sold almost close to $40-45 billion. As the interest rates are peaked out, emerging markets begins to get that flow, and India will receive a disproportionately large amount of that flow this time. And as that money comes in, everything remains same, markets will do well. So I do not see a situation where markets are going to correct in a meaningful manner unless some unpredictable situation happens which nobody can make out and which will always be around the corner. So, I mean, taking money off the table for the sake of it is not a great idea. Remaining invested in markets at this point in time, in my opinion, is one of the best advice one can give.
All right, Vikas Khemani, appreciate your time. Happy Yoga Day once again, and thank you for joining us. And it was lovely to have your family, join us and finding time to, to demonstrate and do some yoga asanas. So thank you very much for that.
Thank you, Nikhil. Thanks for having me.
Nilesh Shah, Managing Director of Kotak AMC, joins us now. Nilesh bhai, good morning. I hope I did not disturb you from your yoga schedule today.
No, Nikunj bhai. Yoga is well before market hours, not during market hours.
So, which is one yoga asana which represents the market ki chal?
So, in some sense, for investors, it is the Savasana where you are just sitting doing nothing and enjoying the ride. And for traders, it is the Sirsasana if you are short on the market.
Is there something called Lakshmi Asan which you like to share with us?
Well, if there is no asana, we can always create one. And I think the best asana in the market is, as Vikas was mentioning, stay invested for a long-term growth story. Nikunj bhai, you remember in 1990, we were about $300 billion economy and around the same market cap. Today, 3 decades down the line, we are 12 times higher in terms of GDP and similarly in terms of US dollar terms market cap. The same trend will happen over next 15, 20, 30 years. So just stay invested, let the rising tide lift your boat.
Nilesh, India was the one to export yoga to the world as well, and it's become a global trend, and it seems for markets as well, there's a lot of interest and attractiveness that India holds for their portfolio?
Undoubtedly. There are 3 Gs available in India. Growth better than peer group, governance standards which are better than peer group, which reassures investors that if you make money, it will stay with you. And finally, the green transformation. We are the lowest per capita polluter in the world. And despite that, we are taking concrete steps on renewable energy, green hydrogen, and carbon emission. So where will you get this 3G of growth, governance, and green? And last 2 decades, India has delivered 1.5 times more return than comparable peer group. In fact, the future looks even brighter. So my feeling is that yes, foreigners will be a buyer in Indian market. They'll be bigger buyers at lower levels. They'll be probably a little less buyer at higher levels, but they'll be a buyer.
This comes in a very timely manner when the Prime Minister is also, to his US visit as well. Which are the sectors that you believe stand to gain the most? Is it defense? Is it manufacturing? Is it technology?
So always it is the promoter which makes the difference. A good promoter in a bad sector also can protect value or create value. but a bad promoter in a good sector will definitely destroy value over a period of time. But within that caveat of choosing right promoter, two themes which should do well: manufacturing in India, thanks to China Plus One, where companies are now looking to outsource to India in order to diversify out of China. Companies which are catering to local as well as global market should benefit out of this. What we saw in chemical sectors over the last 7-8 years, a similar thing with ups and downs will get replicated in many other manufacturing sectors. The second sector where I am bullish is healthcare ecosystem. More than 1/3 of doctors in US and UK are Indian origin. 45% of medicines consumed by volume in America is made in India. Our healthcare delivery cost is far more competitive compared to Western world than even our IT services cost. Put all these things together in an aging world, over a period of time will we see a healthcare company doing on-site and off-site delivery, employing lakhs of medical professionals and providing healthcare benefits, healthcare coverage to India as well as abroad. So healthcare and manufacturing, these are two sectors where we could see multi-decadal growth opportunity.
We appreciate your time, Nilesh bhai. Thank you very much. All-time high on the Sensex, all-time high almost on the Nifty. Now, 9 points here, 9 points, the 10 points here really does not matter. What really matters is that when you started the year, the general view was that this would be a flat year with a downward bias. Inflation was high, flows were negative, nobody wanted to buy equities, everybody wanted to buy gold, and the earnings recovery was just not there. So what really has been the... I mean, just recall all the conversations we've had in Jan, from a CLSA to a Morgan Stanley, from a BofA ML to a JP Morgan. What was the Sensex and the Nifty target for 2023? Flat with a downward bias. Yeah. What do we have? We have a...
And more importantly, projections on oil, on inflation, all that, their entire picture was all over the place.
Now, that is what markets are. Yeah. What really matters is that directionally where things are moving. So there are two things which I think have permanently changed the India appeal. One, that we've come on the right side of COVID. B, the digital adaptation in India in terms of the India stack or the Jam Trinity which has got created has added to maximum, huge amount of productivity. And your foreign relations, given that India is right now the only oasis on the only large pocket of green, they have improved immensely. Yeah. So on all the aspect, whether it is on the technology and productivity, whether in terms of the positioning of macro versus where inflation is headed, and where in terms of the foreign diplomacy has moved, you've scored. And typically when you score like this, you pretty much know that aapka samay aa gaya. So there is a reason why you're doing well, and there's a reason why you'll continue to do well. So just been, COVID is not the best example to say that it's been a blessing in disguise. It's been a sad event in all of our lives. But sometimes when these events happened, and Rakesh Junwala once said something very nice. He said that after the challenge, what happened, let's say in 1920 when there was a flu, it was roaring 20s for US. Yeah. I think after COVID, it is India where the roaring, where the roaring next 10 years are going to be. And I think it's getting so connected. And that's the time you just want to remind everybody that this one man said that the mother of all the bull market lies ahead of us. And he just got it right.
Where did we reach in terms of the train station? It had started from
Churni Road.
Where did it reach by the end of it? There's a long runway.
It started from Churchgate. It reached only Churni Road.
And I can bet on it that if he was there and if I would have asked him the same question, he would have said it has not even crossed Bandra.
Yeah, so there's absolutely a very long runway of growth which is lined up. But you know what? It's the event that Sensex has hit a record high level. And this is a question we've been posting to all our market guests. We've already scaled almost 64,000 on the Sensex. When are we likely to see that 1 lakh mark on the Sensex? Right from Chris Wood, Mark Mobius, Shankar Sharma, all of them said it's very likely to happen over the next 3 to 5 years. But I think we do have Atul Suri, who we just spoke with recently. And he also said that maybe maybe over the next 3 to 5 years, we're likely to see that mark of 100,000 on the Sensex. Today as well, we are seeing a lot of bullishness across all sectors and across all companies. In terms of sectors, of course, it's names like ZEEL Entertainment, which is have around 7%. Real estate pack is doing well. You also have the banking names, which are doing quite well in the trading session. HDFC Bank has seen a bit of a bounce back. We'll come to that bite in just a bit. But before that, let's go across to Kunal as well, if we can, and get a sense from him of what he makes of the market momentum. Because yes, we've hit the record high life level on the Sensex, but for Nifty, it's still 22 points away. First, let's go across to Atul Suri. When can we expect that 100,000 mark on the Sensex?
I haven't done the maths, but yeah, why not? Yeah, why not? Really, why not? It's just basic compounding. It's going to get there. Yeah, you know, having been in the market for 30 years, I saw the Sensex at around 1,000. So that's like what you're talking about is a 50, 55, 60% move. So I'd see that there's no reason why we should get there in about 4 to 5 years.
Suri, but you know, we've got a whole host of other experts as well who believe that the Sensex is going to make it not just through this all-time peak that we're currently sitting at, but to that 1 lakh mark as well within this decade. Let's listen into that opinion.
Because I don't invest in any Nifty stock or any Sensex stocks and all. So when I talk about Sensex, that means, in fact, I'm talking indirectly, I'm talking about my portfolio. So whether index doubles from here or not, that is a different issue. But I expect that this mid caps where I am investing, not I am, in the general mid cap category, good stocks should double or triple in next 2-3 years time. And so far index is concerned, I think that index is a counting of 21 is happening index, 21,000, 42,000, 63,000. And I think that next stop should be 84,000 in 2 years from now. And of course, 100,000 is just a destination, I think, and miles to go for index.
So for that, my simple thumb rule is compound at about 13-14% and see whether 1.14 to the power of 5 into 66,000, does it become 1 lakh or no? So plus minus, it would be there. Because broadly speaking, if I look at it over any reasonably longer period, returns have been in this range. So, you know, it doesn't need too much of rocket science. That's why I tweet saying you want 2 lakhs, you just extend the number of years. Because broadly speaking, this number doesn't come only from the fact that historically this has been the range over last, I saw it over 3 or 4 periods, which is 5-7 years. And then I think I did 14 odd years and then some 20 years and then my own track, I mean, my career, which is about 26, 27 years. And broadly over every period, it is in this range. But this range is not just coming by looking at historical numbers, but by the fact that Indian GDP in rupee terms grows about 11-12%, and then you can add 1 or 2 more % for the fact that corporate sector might be doing better than the rest of the economy. Or you might be doing it from an equity risk premium point of view, that equity returns are normally 5 to 6% more than the fixed income.
That to me is very reasonable. Yeah, very. Because I would be disappointed if the Sensex had not touched 100,000 5 years from now.
I'm absolutely certain it will reach 1 lakh. Now, whether it happens in 4 years or 6 years, frankly, is really a meaningless debate. But looking at the nominal GDP growth rate, which we are looking, you know, you can safely say we can grow between, say, 12 and 14%, maybe 10 and 14%. You will approximate that number, and if you compound it at that, so in 4 years, roughly from 60,000, you add another, say, it comes to approximately 1 lakh in 4 years. I mean, it's not a reach to see 1 lakh, you know, just at the simple compounding of the nominal GDP rate. I think it's a given, 100%.
Market को predict करने की कोशिश मत करो. More often than not, you will be wrong. But today, is 1 lakh Sensex looking unimaginable? Answer is no. And my request to this audience will be, just don't think about 1 lakh Sensex. Beyond that also there is a much longer journey.
Generally speaking, if a country is growing at 7%, you can expect companies, reasonably good companies, to be growing at 14%, double the growth rate of the country. So it's very possible that you can get this incredible growth in the size of the market and the actual investments in the market, no question.
Okay, let's move on and let's welcome on board our chartists as well. We continue to hold on to that life high for the Sensex. And Kunal, what's your math telling you? When do we hit 1 lakh on the Sensex?
Well, I think going with the average return of 12-15% of a CAGR return, I think we can expect a 33% return for the Sensex in the next 3 to 4 years. So wouldn't be surprised that hopefully by 2026 we scale past about the life highs or the 1 lakh mark on Sensex.
Okay, but which are the sectors or stocks you believe, Kunal, which will lead this rally? I mean, banking has been quite a bit of laggard. What looks good to you now?
So today the stock which I would want to discuss is on Piramal Enterprise, and again a classic case because we highlighted the stock almost a week and a half out back when it was sub 800 mark level. And I think Piramal Enterprise over the last many days have shown one of the more stronger signs of a breakout in terms of pattern, and that's the 200-day moving average breakout. So the chart over here indicates that for the last 1.5 or 2 years, the stock was consistently making a pattern of lower highs for itself, breaking past about the 200 DMA. This was, I think, in the start of 2022 when the stock was at 1,300 rupees. And from here on, the stock corrected much further. I think the previous low was just below that 600 mark for Piramal Enterprise. Now, the interesting bit of the chart is for the last so many attempts, the stock failed to cross over the 200 DMA. There have been previous bouts of rally for the stock price, but it could not change the behavior of the stock, which is breaking past about the long-term averages. But in the last couple of days, there has been a successful breakout of this 200-day moving average, and this, I believe, could be a strong indication of a change of pattern for Piramal Enterprise. The next set of targets now which we are looking at for the stock is in the range of 1,050 to 1,100, and the bigger targets would be scaling past about the 1,300 mark, hopefully in the next 3 to 6 months. So would be bullish on Piramal Enterprise, and I believe it's a classic case of a turnaround from current levels.
Right. Naresh, what's your reading? What's looking like a chart buster idea?
So that's a chart for HCLTech. Very interesting chart given the way Nifty IT index has been behaving. The IT index continues to underperform, but HCLTech has made a 1-year high. A classical cup and handle formation, multiple attempts around 1150 mark as we see in the last 4 to 6 months. And finally a breakout above that 1150 mark. So it becomes a risk reward trade here where the stock could go back to the previous all-time highs of 1300, 1350. Would keep a stop loss at 1140 for this.
Okay, but what are the other stock ideas coming in from our technical experts? Kunal, you go first.
So Power Finance is stock which I discussed in the morning. That's something which I would recommend as a buy. 225 as a target. Stop loss could be kept at 195. In fact, the stock has moved up higher, so maybe the stop loss could be tailed to 200. And L&T Finance is the other stock which has been into an absolutely strong momentum. Looks quite strong even at current levels of 123. Targets of 135. Stop loss at 118.
Okay, so those are the top recommendations from Kunal. Naresh, what about you?
So first would be a buy on Power Grid. The stock has made a new all-time high. A short-term breakout done here. Stop loss at 247 and a target price of 270. Second is a buy on Max Financial Services. Still a laggard in the whole insurance pack. The stock has given a breakout today. Good price volume action. Stop loss at 715 and a target price of 780 plus.
Right. Okay. In fact, on that note, we're going to take a very quick break. But, Rakesh Jhunjhunwala, he was perhaps called India's Warren Buffett for a reason. He was the one who actually had the vision to call it India's decade. In fact, India's century on record to us just a few years back. And yeah, he's the one who actually called this mega bull market in the markets many years ago.
For an average investor, do you expect that in this decade, there is a strong, not probability, but possibility that Nifty can give a double-digit return?
Double-digit return every year for the next 5, 6, 7 years.
5, 6 years. 10, 11% return.
I mean, I would be disappointed if in the next 8, 10 years, the Nifty doesn't give a high teen return.
Which means in this decade, Sensex definitely should cross 1 lakh. If I just put maths together.
I mean, if high teens returns, it should be much more than 1 lakh. But Nikunj, I am extremely positive on the markets. My perception of India is very bullish. It differs from most Indians. I reserve the right to be wrong, but that's what my feelings.
Rakesh Jhunwala's entire wealth is in India, even though people have options to invest outside India. Is that patriotism or a business decision?
There is no patriotism in that. It's ease. I would like to see. I invest because I enjoy the process. Now I don't know anything about Facebook, and I'm not going to go and find out. Plus, legitimately, the government of India doesn't allow me to invest more than $1 million a year, or maybe because I have 5 children, $1.25 million. It's not going to make much difference to my balance sheet. So why go where? And I want to go for scale. And second thing is, I think the opportunities in India are so great, right? As good as any in the world, over a period of time. So when the food at home is so good, why think of eating out?
How do you not shake up your belief and conviction when there is crisis? You know, in your career, you've been sitting on stocks for years. You know, India's gone through up and down. There have been global crises, 2008. But your belief in India and your belief in the businesses which you bought rarely shakes.
Kabhi khushi, kabhi gum, kabhi bundle, kabhi fun. So, see, nothing is linear in life. But the fact is that India has raised its rates of growth in every decade since independence, right? And I want to say what leads to the growth of a society? Skills, demographics, natural resources, democracy, entrepreneurship. And India has this in abundant measure. It can't be taken away. Ups and downs are always going to come. And what are the alternatives to investment, to stock investment? I own no real estate except maybe a house and one land here or there, right? We invest the least amount in jewelry as much as I can convince my wife. So, what is the alternative to equity? And I'm not looking at equity that it should give me 24% return, 30% return, 40% return. It gives me 18% return. The ease with which I can invest. Suppose I'm bullish on real estate. I search for a land, I get a broker, then investigate the title, then somebody is goosifying in the land. Instead of that, I buy DLF shares on the screen here. So the ease, there is liquidity, right? And I believe in India's growth. Because I think that which constitutes the fact, see, everybody has a chemistry, right? There is DNA, India's DNA is such that there will be growth.